Friends, myself Subrata Mukherjee, and today I will discuss a problem on hire purchase. On 1st January 2000, X purchased a plant from Y on hire purchase system. The hire purchase rate was settled at rupees 60,000 payable as rupees 15,000 on 1st January 2010 and rupees 15,000 at the end of 3 successive years. Interest was charged at the rate 5% per annum. The asset was to be depreciated in the books of the purchaser at 10% per annum on reducing balance method. Given the present value of an annuity of rupee 1 per annum at 5% interest is 2.7232. Prepare necessary ledger in the books of X. In this problem, the cash price is not given. The hire purchase price, which is given as rupees 60,000. So we will calculate the cash price of the asset. So 15,000 is the down payment plus 15,000 the yearly installment into 2.7232. So this is the annuity which is given in the question. So 15,000 plus 40,848. So this will give you 55,848. So this is the cash price of the asset. So this is the cash price of the asset. Now, how this 2.7232 has been arrived at? So I will explain in the following table. So alternative way to find the cash value or cash price of the asset. So in alternative way, what I have written here, I will write the first column as the year. So first year is 0. This is the down payment that will be made by X to Y. So this is year 1, that is at the end of year 1, 2 and 3. And 3. So in the next column, the amount which is paid. So amount paid is 15,000 at year 0. This is the down payment made, and 15,000 the annual installment. Next is the PV factor. This is very important. So this is at 5%. So the first at year 0, this will be 1 because the present value is 1 right now. The amount which is paid as the down payment, this is 1. So the amount which will be paid at the end of the year, at the end of the first year at 15,000, what is the present value of that 15,000 right now? So this will be 100 divided by 105. So in my earlier video, I have explained this calculation. So 100 by 105. So this is 0.9524. Next, PV factor 100 by 105 to the power 2. So square. So this will be 0.9070. And the third, for the third year, 100 by 105 to the power 3. So this is 0.8638. And the sum total of these three PV factor is 2.7232. So what is the present value? The present value of the present value. So for year 0, this is 15,000, then this is 14,000. You just multiply 15,000 into 0.9524. This will give you 14,286. Then 15,000 into 0.9070 is 13,605. 15,000 into 0.8638 is 12,957. And sum total of the present value is 55,848. So this is basically the cash price of the asset that I have calculated earlier also. So 55,848. So I have prepared in the books of X asset account. So on 1st January 2010, asset account debit to Y 55,848. On 31st December, depreciation has been charged at the rate of 10%, 5,585. By balance CD 50,263. So this balance will be carried forward on 1st January 2011 to balance BD 50,263. Again on 31st December 2011 by depreciation 10% has been charged on the written down value 5026 by balance CD 45,237 is the balancing figure. Now this amount will be carried forward to 1st January 2012 to balance BD 45,237, and at the end of the year, that is on 31st December 2012, by depreciation for 4,524, and by balance sheet is the balancing figure of the asset as on 31st December 2012. So here I have prepared the ledger of Y, that is the hire vendor, in the books of X. So on 1st January 2010, asset has been purchased and the cash price of the asset is 55,848. So the asset account debit to Y or hire vendor account. So 55,848 is credited in Y account. Now on the same date, 15,000 is paid toward as down payment. So Y account debit to bank 15,000. Then interest is charged on the outstanding balance. So 55,848 minus 15,000 into 5% is 2,042. At the end of the year, that is on 31st December 2010, first installment of 15,000 is paid and to balance CD is 27,890. This is the amount which is outstanding to Y. Now this amount will be carried down on 1st January 2011. So by balance BD is 27,890. So again interest is charged. So interest account debit to Y 1395, 27,890 into 5%. Then at the end of the year, that is on 31st December 2011, the second installment of 15,000 is paid and to balance CD is 14,285. So this is the outstanding amount of Y as on 31st December 2011. Now this amount is carried down on 1st January 2012 as 14,285, and then on 31st December 2012 interest is accrued for 715 at the rate of 5%, and the third installment is paid on 31st December 2012 as 15,000. So this is the ledger that I have prepared and is presented to you in one screen. You have understood the problem. I request my viewers to subscribe my channel to get regular updates and to see the playlist section of the channel to see the earlier videos that I have uploaded there. Thank you.